Thank you for joining us on Tata Chemicals Q4 and FY18 earnings call. Today we have with us Mr. R. Mukundan, the Managing Director and CEO, and Mr. John Mulhall, the Chief Financial Officer. Before we begin, I would like to mention that some of the statements made in today's discussions may be forward-looking in nature and may involve risks and uncertainties. A detailed statement in this regard is available in the results presentation. I now invite Mr. R. Mukundan to begin proceedings of the call.
Thank you. Good day, everyone. Thank you for joining us on Tata Chemicals Q4 FY18 earnings call. Today we have. Let me briefly run through some key operational details, which my colleague John would run you through, our CFO, and I'm also joined by my colleague Mr. Zarir Langrana, the Executive Director on the board. FY18 has been an exciting year for us in which our business performed well, along with various events happening throughout the years. We witnessed a good delivery of our stated strategy, that is exiting regulated business and profitably running the business in India and overseas. Some of the major events which happened during the year were adoption of GST, signing business transfer agreement with Indorama Agrochemicals Private Limited, wholly owned subsidiary of Indorama Holdings BV Netherlands, for transfer of phosphatic fertilizer, and the completion of transfer of assets pertaining to urea and customized fertilizers to Yara India Limited. Moving on, quarter-wise business performance, India Chemical business during the period under review delivered steady operating performance. Sodium bicarb recorded highest ever production and sales. Despite the challenge in terms of increasing energy costs, our operation continued to maintain a steady margin structure. This is on the back of, I would say, the market being fairly strong, market demand being fairly positive, and we maintained that the market position was fairly balanced. Similar is the outlook in US, which reported strong operating performance. This is again on the back of higher production and sales volume, better utilization and plant efficiency. Out of the total AMT benefit due to change in US income tax legislation received last quarter, there was a minor benefit coming through this quarter as well. UK business was subdued due to lower production and sales volumes. Salt and energy business performed well on the back of better sales volume. The performance of Kenyan business was as per our expectation, with higher sales volume, better operational efficiency and realization. Kenya business continues to focus on improving and maintaining its quality and operational efficiency. So overall, the industrial chemical business has performed well to the plan and continues to track good traction. Our consumer business saw good growth this year, good momentum this year. Tata Salt continues to grow in terms of sales and production. Other consumer products were impacted due to lower sales volume. This is mainly due to the changes we were doing with respect to our supply chain mix during the year. We launched new products under the platform of pulses. This is value-added products. This includes multigrain khichdi mix, multigrain chilla mix, which were very well accepted in the market. Tata Sampann Spices also continues to move forward as a stronger brand with improvements in its presence in various markets. With respect to fertilizer business, we have completed the transfer of assets to Yara India, and as on date, we recognize a pre-tax profit of 1,279 odd crores. The transfer of assets to phosphatic fertilizer to Indorama is progressing well. We expect to complete this transaction soon. Rallis, including metallics, has shown healthy performance. And in the specialty chemical front, we've signed a BTA, business transfer agreement, with Allied Silica Limited for acquisition of its manufacturing facility in Tamil Nadu. You're aware the board had cleared 295 crores of investment in SDS, which is a versatile product and a downstream addition to soda ash business. We expect the plant to start commercial production anytime during second half of this year, provided the transaction gets completed during the current quarter. There's a huge interest in the customer, in both the customer and in the overseas, both in India and overseas, and we are encouraged, which has encouraged us to push this business forward in a very strong manner. In addition, the investment in a new manufacturing facility at Nellore near Chennai is progressing well. We expect the plant to be ready in about 15 months' time. Both of these businesses will leverage the capabilities of Tata Chemicals and its innovation center. Finally, we are happy to inform the board of directors has recommended a dividend of 11 per share, which is maintaining the dividend as per last year. And they've also declared a special dividend of 11 rupees per share, which takes into account the sale of the fertilizer business, aggregating a total of 22 rupees per share, and this is subject to approval from shareholders at AGM. To conclude, I'd like to state that we are clearly focused on our leadership in chemical business and to grow our consumer business and specialty business. We are fairly confident of meeting our strategic objectives, which we set some time ago. Now, I would like to invite John to give us insights on financial performance.
Okay, thank you. A couple of points I just want to reiterate from our performance last year in the last quarter. It was the transfer of the Babrala operation to Yara in the 12th of January was successfully processed. That contributed a significant amount of cash to the business to the extent that Tata Chemicals standalone had net cash at the end of the year of almost 2,350 crores against debt last year of 1,310 crores. In addition to that, we've improved our operational performance in managing cash. Working capital is now down at 690 crores against over 1,600 this period last year. And the gross subsidy outstanding was just shy of 860 crores against 1,680 crores last year. From an international perspective, we saw good production and sales performances in the UK and Kenya, particularly in the US as well, where the effect of the work done to improve the operations through the winter period is very successful, and our production was about 90,000 tons higher than this quarter last year. But for two outages at the start of the year in the UK, which we talked about before, to do with power outage and a fire, all of our operations internationally would have delivered a PBT better than last year. The UK operation, combined British Salt and Soda Ash operation, was just below the PBT for last year. So on that basis there, I'll open the floor to any questions.
So we open it up for questions?
Yes.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Anand B. from Samiksha Capital. Please go ahead.
Thank you for the opportunity. Sir, I just wanted some color on the soda ash supply situation globally, and in particular with respect to China. There were some developments that the government has cut down on subsidy, that is on the fertilizer which is produced during the Zhao process, and hence Chinese soda ash viability has reduced. So if you can comment on it a bit.
So I would say if I were trying to not read too much into it, the market is balanced to tight. That's clearly a reflection. Going forward again, it will, in our view, remain balanced to tight.
Okay. And sir, with respect to anti-dumping duties which are up for consideration and Turkish supply, any color on those two aspects?
We have no view on it, and we do believe that the market conditions are conducive, whatever may be the outcome.
Okay. And lastly, sir, for our Kenyan production, oil prices have risen recently. And do you expect any energy cost hike leading to lower profitability at Magadi?
So, really, I agree with you that there is a bit of hedging which we have, so we get some time element in terms of the impact following through into the operations. But while the energy prices are a concern, I still maintain that the impact on the margin is a function of the market condition, which remains fairly favorable to producers.
Okay. I'll come back and make you for additional questions.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, good evening, friends, and thank you for the opportunity. Sir, firstly, just wanted to understand, sir, for the energy costs have gone up, and for this financial year, sir, have you taken up any price increases domestically for our inorganic chemicals?
There's been one price increase taken, which is running now, and we are closely monitoring the situation. So I think our view is that we need to be respectful of both market conditions and customer interests.
Okay. So that the price hike was during this quarter itself, for the first quarter, or in the March 18?
Q1, yeah.
Okay, Q1 of last year. I mean, Q4 you are telling.
Q1 of the current year. The current year which is running.
Okay, April, May, what is the quantum of hikes that we have taken, sir?
About 400.
400 rupees. And it is in this month, in the month of May?
It's somewhere around this month, yeah.
Yeah. So now coming to your specialty chemical part, sir, when is the groundbreaking happening, and by what time the turnover will come up, and what are the margin profile from this business? And your competitors are scaling up their capacity in the soda ash business, and they are also contemplating a greenfield project. So, sir, how are you looking at upping your capacity, something going forward in the soda ash part?
So in terms of the new businesses, you asked several questions. Number one, there are two new businesses. One in Nellore, the groundbreaking has already happened. The business is expected to start at least supplying test products to customers somewhere around the end of 19, and is about 15 odd months. That's really what the time frame I had given. It's a plant which has been set up to highest FDA standards to cater to pharmaceutical and pediatric market segments, in addition to catering to various other market segments across the board, which is there for human as well as for some special veterinary solutions. So it spans a wide range of market, but it's clearly a food additive which is made to the best specifications. In terms of the other plant, the allied silica business, we are in advanced stage of moving forward on that deal, and we expect that the plant would be in a position to start supplying to customers in about 3 to 5 months' time after we take over. That should give you broadly the time frame on the two areas. As far as the soda ash expansion is concerned, we actively monitor. The board is fairly supportive of looking at investments, and we had stated that the investments both in India and in US will be in a very calibrated way, and we will make the necessary statements as and when we are ready.
So we can contemplate something in the future. That is what the conclusion is, depending upon the market conditions.
All I'm saying is we can conclude that we are fully supportive. We are watching it closely, but unlike many of our competitors, our options are wide. We have 3 broad pillars of business. We don't have just one business. So we will calibrate it in a way that we drive the growth towards making sure that both revenue and the return on capital continue to improve. So whether it is consumer or specialty business or industrial bulk business, there is a process the board has laid out, and it is watching it carefully, and it is all a function of where the returns are highest.
Yes. And last point, sir, for the December quarter.
Mr. Kapoor may be requested to.
I'm in the queue.
Sure. Thank you.
Thank you.
In order to ensure that the management is able to address questions from all the participants in the queue, we request you to please limit your questions up to 2. Should you have a follow-up question, we request you to rejoin the queue. We move to the next question from the line of Abhijit Akela from India Infoline. Please go ahead.
Yeah, good evening, gentlemen. Thanks a lot for taking my questions. The U.S. EBITDA for this quarter seems to be a little bit lower than it was in the December quarter. So about 141 crores this quarter compared to about 180 in the December quarter, despite normal production. So any specific cost items that are responsible for this?
Yeah, obviously there's just some additional maintenance costs and operation costs at the factory. Nothing huge. It was just timing of some things.
Okay, so this is obviously non-recurring.
Shouldn't be.
It shouldn't be. It's I think just some one-off items here.
Okay, got it. And the other thing was on the standalone balance sheet, we've not paid off debt despite having surplus cash, which of course has led to interest cost as well as pretty high other income. What are your plans with respect to the cash hold on the standalone balance sheet?
Yeah, so the debt that's left on the standalone balance sheet is the ECB, which is due to be repaid in October this year and October next year, and also the 250 crores of NCD that's outstanding, and that's due for maturity in 2020. So we'll look at these. Yes, can't repay the NCD early, but we'll look at the opportunities on the ECB going forward.
Okay, thank you. I'll get back in the queue for more.
Thanks, Sanjay.
Thank you. The next question is from the line of Viraj Kacharia from Securities Investment Management. Please go ahead.
Yeah, thank you for the opportunity and congratulations on a good set of numbers. I just had a similar question as the previous participant. So if you look at last couple of quarters, we have a very stated strategy of exiting commoditized businesses, focusing on growth and high return businesses. And in last 2 to 3 quarters, we have been doing exactly as per our strategy. But if we look at this quarter when we've got a good amount of cash from the sale of fertilizer business, broadly looking from a return on capital employed perspective, we have a target of 20%. I'm just trying to understand how we're looking to get at 20%, because even with the capital base, current capital base being so high and the current level of soda ash, even with the investments which we are making, we won't be able to reach anywhere close to 20%. So just trying to understand, how we're looking to be closer to 20% and what are we doing with the cash even after the repayment of ECBs.
So I think one is having capital discipline. So we are certainly investing in businesses which have a higher return on capital than the stated number so that we don't slip below. Obviously, the cash lying in the books does not earn 20%, so it is a drag on the return. And we are in no rush to use that up unless we have clear opportunities. But we are actually looking at opportunities. The board has a clear plan, and we will come back to you in as our strategy rolls up with where these will be deployed. So our retention of the cash in the business has a specific purpose, and that purpose is to deploy it to usefully, not keep it as cash. So we will move in that direction.
So just to add to that, would that mean that a good part of the cash would be redeployed in other opportunities where we have a higher return potential? Because even if we do that, there'll still be a considerable amount of time where it will take to reach to a 20%, because the capital base of the current operations, especially soda ash, is so large that even when these investments start to mature, we still won't be able to close to 20%. So are we looking at any other measures in terms of rewarding back shareholders, which also takes care of some of the capital employed part of the business?
Good question. I think we keep actively all options open.
Okay. Second question was on the U.S. business. You said there were some one-off expenses. So can you quantify? Because even if you look on a standalone or consolidated basis, we've seen a sharp increase in other expenses, Q&Q and year-on-year. So just trying to understand, what is it driven by, and if you can quantify the one-off expense.
Yeah, I mean, in the U.S. operation, also we have shutdowns, and we're probably building up some stores expenses to take care of the shutdown that's happening just now. But I mean, I think the total expense is probably an extra $4 million or something. It wasn't a huge number.
Sorry, how much you said?
4.
Okay. And this last question was on the soda ash margins. You indicated that, we have been taking some price increase in May. So does that fully cover the input cost pressures which we are seeing in India and other locations, or, just...
We are watching it closely. I think some of this will go to mitigate the cost concerns, and partly through efficiency improvements we should. So as I said, the market conditions are favorable to maintenance of margin, but we are closely watching it.
Okay, I'll come back in the queue. Thank you.
Thank you. The next question is from the line of Rohit Sinha from Emkay Global. Please go ahead.
Thank you, sir, for taking my question. First question is on soda ash business. As we have seen good margin improvement in that segment. So first of all, we'd like to know it was volume driven or realization driven, and going forward also, is there any further price hike we'll be expecting in the soda ash segment?
So the last one, I cannot comment about hikes, but all I can say what the market condition is, which I've already highlighted. Secondly, as far as this quarter has been steady, usually sometimes we have this whole unsteadiness which used to come because of extreme weather, but this quarter again, because of winterization plan, there will be no impact, and all the units have performed well.
So basically it is, can we assume it is as both volume as well as realization driven?
Yes, it's a combination of the two. Yeah.
Okay. And next question is from the balance sheet side. If we see it on the console basis also, we have a significant increase in the total debt. So is it that will come down in coming time, or we are going any expenses?
There's no increase in debt. What you've seen is a reclassification from short-term to long-term debt. We've refinanced Singapore. It was $200 million in December this year. So it's shown as a short-term debt last year. It's now long-term.
Oh, okay. So any future capex plan for this soda ash business, or any other segments where we can see capex?
No, I mean,
we continue to invest, and I think as far as we are concerned, we continue to invest to maintain the business in the same, at least in the same shape it is in. And our investment options are guided by the return conditions across three verticals.
Okay, so any quantum we can say roughly about by FY19 or FY20, we can assume a figure for the capex?
So as I said, we are looking at debottlenecking India and US, and as the opportunity presents itself, we will come back to you.
Oh, okay. Thank you, sir. I will come back in queue.
Thank you. The next question is from the line of Meet Jain. Meet Jain has moved out of the queue. We move to the next question from the line of Samant Kumar from Motilal Oswal Securities Limited. Please go ahead.
So, hi. Yeah, gross debt increased from 6,000
Excuse me, this is the operator. Mr. Kumar, may we request you to speak closer to the phone?
Yeah. So, gross debt increased from 6,000 crore in December 2017 to 6,418 million in March 2018. So, what was the key reason for that?
Yeah, the only thing except there has been the revaluation of the rupee Australia. Yeah, the rupee's done at 63 and we budgeted at 67, so that's the only difference it's going to be. On local currency basis, there's been no change in the gross debt.
Okay. So, what is the soda ash price increase in US business and Europe? As we know, there is a price increase happened in month of January.
No. Yeah, I think Europe and US are flat because they are long-term contracts, so I don't see any change there.
So when we can expect long-term revision in the price?
They're annual contracts, so I think usually the revision happens closer to December end, so Jan beginning the Q4 of the current year.
Right. So we have not gone for any price revision this quarter, this year?
They are mostly contracted out.
Okay. So this contract we have not increased any price?
Oh, you mean between last year and this year?
Yes.
Yeah, it's been mostly flat here.
Okay. So coming year the price will be flat for US business?
Yes, that's right.
It's a one-year contract, Sumant.
Yeah, okay. Thank you so much.
Thank you. The next question is from the line of Akshay Bhor from Kotak Securities. Please go ahead.
Hi, thank you for taking my question. Just a quick one on the consumer business. What would be the top line for consumer business X of salt for FY18?
Yep. This year it would be close to about 100 odd crores.
Sorry, consumer business X of salt would be about 100 odd crores. And last year, how much was that number?
About 350 odd crores. There's been a drop because of mainly pulses. Prices have dropped, and also we have dropped the volumes in pulses. Pulse prices almost dropped by almost half. So it's not just volume, it is also price effect of pulses.
Okay. And any expectations of this number going forward, maybe next couple of years, given the product launches that you've done?
So we had said that overall the consumer business is about 2,000 odd crores, and our expectation is to get to the first figure of about 5,000 in about 4 to 5 odd years, give or take a year.
Fair enough. And when do you expect to be EBITDA break-even, in that case, or PBT break-even?
We are very close to that even this year. I think it's very, very small amount of... so while the revenues have dropped, I think the margin profile has improved substantially.
Great, understood. Thank you.
Thank you. The next question is from the line of Amit Kadam from LIC Mutual Fund. Please go ahead.
Yeah, hi. So my question is like, if the current cash flow what we are generating, I think so by next year we should on console level also be kind of a debt free. And so looking to the further deployment of capital, so we went into this nutrition product and this SDS high density silica. How much such opportunities are there to like to deploy our incremental cash in such kind of business? And how can we scale it up, this particular opportunity?
So clearly, there is an organic growth and also there is inorganic growth, and we are looking at all options. But our intention is to focus our capital on specialty and consumer business. And consumer business, is not very capital intensive, but to whatever extent the capital support is needed, we'll continue to give. And specialty business has capital needs. And we are keeping this to look at options and opportunities which both may be internal as well as external. So at this point, I think all I can say is that the board is fairly confident of arriving at the opportunities and every year reviewing the cash position, and will arrive at the optimum solution for both shareholders and the company and its customers.
Okay, but only talking about the specialty chemical segment. So we have chosen this particular two products, which looking to my limited understanding about this particular thing looks very discrete. Like they don't have any synergies there, neither to our core products. So like how many product pipeline kind of we are creating, or how do we look at this particular space? Like because it does not gel with the existing things what we do, and like be it nutrition or a SDS kind of a product. So whether it will be this small ticket size products, and then we could be adding more products eventually, seeking more opportunity, or every product has the scalability to become almost like a ticket, like a 500 crore product kind of.
So I think it's a gross underestimation, 500 crores firstly. Secondly, each segment is a size which is at least, we don't look at a segment which is less than $5 to $10 billion globally, and these are not India-specific businesses. These are going to be supplying around the world. So when I mentioned the nutraceutical plant has been built to FDA standards to pediatric consumers, most of the consumers are going to be overseas. And if you look at the product range, while we are starting with oligosaccharides, which is mostly sugar-based, which is fructo-oligosaccharide, we also have lactose-based galacto-oligosaccharide, and then we have polyols. There's a whole series of platform chemistry which we are developing, which is all the nutrition additives, and this is mainly focused currently on gut health. And the platforms solutions are endless. After gut health, one can go into bone health, one can go into circulatory system health, one can go into neuro health. So there are solutions available for each one of them, which are natural, made through biochemistry, not through like synthetic chemistry. So very clearly we have solutions which we continue to develop in. So this is a platform technology. We have no reason to believe it is one. And in terms of the plant land size which we have acquired there, the plant itself is designed to go 4 times its current outcome over a period of next few years. So clearly we are looking at this as a great platform to grow going forward. Similar is the case with silica. Silica is a great business. It has applications in cosmetics, in toothpaste, in tire, and if you look at one segment, tire itself, the rubber additive segment, it's huge. As tires shift to green tires, which is mandated by law, this demand is going to continue to grow. So, and it's not a demand just in India; it's around the world. So, clearly, we are not seeing ourselves as looking at these businesses just India specific. So, even as we speak, the two platforms, the silica platform and the nutraceutical platform, afford great growth opportunities.
Okay. And just to wind up with a small suggestion, so in the upcoming annual report, so can you throw some more light on this particular products and kind of the opportunities, and so that we can understand it much better?
We'll take note of your request.
Okay. Thanks. Thank you.
Thank you. Next question is from the line of Pranav Tendulkar from Rare Enterprises. Please go ahead.
Hi. Thanks a lot for the opportunity. I just wanted to understand where in our portfolio we are taking the margin risk in terms of not passing the raw material prices to the end consumer within 1 month. So in basically bulk chemical side.
Sorry, what do you mean by margin?
So for example, suppose you are taking annual contracts for US and UK supply, right? The raw material price risk will be with us.
Yeah, I agree. But in UK and US we also hedge a lot, so I really don't want to comment on that. So we will come back to quarter time. So and in India and in Kenya we do hedge. So I think there's a level of hedging which is. But Kenya prices roll up and roll down depending on the market situation. And while in India the hedging is not there, there are long-term contracts. But in India prices roll up and roll down again.
Okay. So we are. You mean to say that we are adequately hedged in terms of margin per ton?
We actively look at the risk to margin. The good news is the market conditions are favoring producers.
Okay. So, in terms of soda ash, can you just tell over the last year what has been the various raw material prices in terms of percentage of cost of materials or percentage of sales?
No, we have.
Okay. Can you just tell me the top raw material, top 1 or 2?
So energy cost would be the highest, which moves up or down. The rest of the materials don't fluctuate that much.
Okay. Thanks a lot.
Thank you. The next question is from the line of Madhav Madhav from Fidelity Investments. Please go ahead.
Hello. Yeah, so I just wanted to check on the 2 new products which you've launched, the HDS and nutraceuticals. For these 2 particular products, what would be our internal 3 to 4 year target? Like for the consumer one, we have a, say, 5,000 crore target in, say, 4 years. What about for these 2 new products? How are we thinking about new capacity and expanding?
So clearly, I think the asset turn in this is closer to 2. So first we have to reach that after we make the investment, then we'll go for expansion.
Okay, but any internal sort of target that you all are thinking about or anything of that sort?
So that's the target. We'll get to full capacity before we expand, or very close to full capacity before we expand.
All right, okay, fine. Thank you.
Thank you. The next question is from the line of Anand B. from Samiksha Capital. Please go ahead.
Thank you for the opportunity again. Sir, out of inorganic chemicals revenue of 8396 crore that we had in FY18, how much of the revenue would be coming from these fixed price contracts in the Western Hemisphere, US and Europe, which has revised annually?
So you have the standalone sheet that reflects India. The rest of the world is available. If you deduct the two, you'll get the number.
So all the rest of the world business is fixed price contract, is it?
I think you need to make the guesstimate on your own, but you can work this out, I can tell you.
Okay. And so you mentioned about green tires and the opportunity in high density silica, and this is mandated by law. So if you can help us understand the opportunity in this space.
So I think that's one of the segments. If you look at, there is oral use of silica in toothpaste. There is use of silica in various applications which range from other chemicals and various food grades. So there's a whole range. So I was only highlighting that we're going to be manufacturing the whole range. Even in one segment called tires, the application is huge. So we don't see this as being the question which the previous participant had asked was, are these marginal businesses? They are not. And clearly, if you do the search on your own, you would get to know the size of the market opportunity. And they are fairly large. So I said we don't select any market segment which is certainly less than $1 billion, but usually would keep them between 5 and 8.
Okay. Thank you, sir.
Thank you. The next question is from the line of Rakesh Vyas from HDFC Mutual Fund. Please go ahead.
Hi, good evening. Few questions from my side. First one on the consumer salt. So it appears that for last 2 years, this volume has got stagnant. Any specific reason that you can highlight?
There is no specific reason. It's just, it's not really stagnant. It has grown. But broadly, I think we are limited by our growth of capacity.
So any plans to expand this over the next 12, 18 months?
Yeah, we are constantly investing.
Okay. My second question pertains to the capex plan, sir. So what is our estimated capex for this year and next year, including the maintenance capex?
So our number is usually about 500, but this year it will be maybe because of the additional investments we are putting in, maybe 200 to 250 to 300 odd more crores than normal run.
Yeah. Okay. So lastly, I think many participants have already asked, but just wanted to understand this surplus cash that we have on our balance sheet. Given that even if we explore opportunities to invest, this is a very large quantum for it to get deployed unless we have any acquisition plans or very, very large capex over time. So I'm just trying to understand, are we seeing any opportunities or seeking any opportunities like that? Or this will get deployed over time?
We're actively looking at opportunities and be assured that this war chest is needed. We know it will come, so we are actively looking.
Great, sir. Thank you so much and best of luck.
Thank you.
Thank you. The next question is from the line of Tarun Lakhotia from Kotak Securities. Please go ahead.
Thanks for taking my question. Two quick ones. One is, how much is the revenues from the salt business in this fiscal year?
Sorry, please, could you explain the question?
How much is the revenues from the salt business in this fiscal year?
Yeah, I think about 17 to 1800 crore. We won't give a specific number, but you can take that as a figure.
Understood. Second is, could you just elaborate a bit more on your strategy to get to a 5,000 crore, revenues in consumer business in like 4 to 5 years? As in what are the key product categories which you are focusing on or may look at, which will help you get that incremental 3,000 crores of revenues in the next 4 years?
So I think I explained the platform of pulses itself is a big category. So we had a learning last year, as you recall. One of the big shifts which happened between last year and this year is the reconfiguration of supply chain. We had a hit of almost 40 odd crores in one of the quarters because of the long supply chain which we had. we have now reconfigured, and we actually have sailed through the entire fluctuations of the entire year, despite the prices moving up and down at the commodity mandi level. We've been able to maintain pretty close to very close to a zero EBITDA level as of now. So we're close to break even as far as EBITDA is concerned. So that's a creditable achievement by team in terms of reconfiguring the supply chain. Now we are ready to move forward. So the reason we had slowed down this year was to, we could have run harder and kept the risk growing, or we could reconfigure and de-risk the business and then move forward. So we took the decision of moving back, de-risk the business and move forward. Now we are going to be moving forward during this year. And if you say what are the opportunities, one is in the pure commodity area, there is pulses which are packaged, which have certain margin structure. Then you've got organic pulses which you recently launched. Then you go slight value addition in terms of basin. But then once you get into mixes, the value addition really ratchets up, whether you talk about khichdi mix or chilla mix, or we're launching adai mix very shortly, or then there's a pipeline of dokla, idli and all coming on the way. So it's a long pipeline. So every Indian product which anyone eats has some pulses in it, and we are looking at the entire range.
Understood. I understand it is too futuristic, but could you just give us a sense in terms of what opportunity do you think the pulses market would be, just the pure commodity part and the value-added part in, say, next 5 years time frame, which you would be able to capture? Broadly put together between pulses, spices and other products versus salt, in 4 to 5 years time, their contribution will be 50-50. Understood. My question actually was more to understand what is the split do you think would be from the value-added products and the, pulses or basin as a commodity. So, if the first will be, say, 1,000 crore and the pure pulses and other commodity products could be, say, 2,000 crores or something like that. I mean, in terms, just to appreciate the size of the opportunity which we are looking at. So, the reason I mentioned that on a 5,000 crore ambition, 50-50 is because we are focused that our growth will be driven largely in a balanced way where value added will grow sharply going forward, not just the commodity side. Fair enough. Thank you.
Thank you. The next question is from the line of Abhijit Akela from India Infoline. Please go ahead.
Yeah, thanks so much for the follow-up. Just a couple of quick ones. The share of profit from JVs pertains to IMACID, is that correct? And if so, what's the outlook for IMACID? I believe it's not being divested along with the Haldia operation. So what are your plans for that?
So it's not being divested along with Haldia. It's a profitable business. And it continues to generate profits. It's in the right spot. Board of that company is evaluating options because it is also sitting on cash. So we will come back to you. As far as our position on that business is concerned, post divestment of Haldia, we are while we are a happy shareholder, we are also happy to exit that business. It's not core to us.
Okay. And the improvement in profit from IMACID is because of the rise in phosphoric acid prices? Is that
No, actually phosphoric acid prices have fallen. The improvement in IMACID is due to slightly poor performance previous year because they had a turbine failure, which turbine has come on. So their electricity sales have brought in higher margin.
Okay. And one last quick one, the outstanding subsidy receivable of 859 crores. Now that's pertaining only to the remaining phosphate operations?
Yes, that's right. It's only the remaining phosphate operation, of which I think as we speak today, I think 250 odd crores has already come in.
And this we will collect before divesting the business to Indorama, right?
No, I think this partly will be collected over a period of time. We will come back with a specific plan. Once the date is announced and whatever the number as on that date is.
Right. What I meant was the 375 crore that's being received from Indorama is exclusive of this subsidy receivable.
That's right. That's right.
Yeah. Okay. Thank you so much and wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I now hand the conference over to the management for the closing comments. Over to you.
Thank you all. I think what we wanted to assure everyone is that we are carefully executing a well-calibrated strategy. and this strategy requires a bit of patience in terms of deployment of cash. Nevertheless, we are now focused on the key element of growing revenue needed in two of businesses, specialty business, where we have a large operating presence through Rallis, and we are building two new platforms in nutraceutical and in SDS. The platforms of agrochemicals, SDS, and nutraceuticals present three pillars which are very, very attractive. So we will continue to look at options and opportunities in them, and we are extremely positive on all three of these platforms. As far as the consumer segment is concerned, we have learned our lessons in terms of how to configure the supply chain, and we will move forward with the greater confidence in that market. And as far as Sampann brand is concerned, I'm pleased to say, despite the challenges, the brand has established itself in the modern trade format. It is visible now, and consumers are extremely happy. That is going to play well for the consumer business going forward, and the kind of pipeline strength the business has built, I can only say that I'm extremely confident that business is going to play out. And lastly, the mother business which started this company, which is soda ash, is on a good footing thanks to the market conditions, and we will obviously explore value-adding opportunities to grow that business in a way that the margin structure continues to improve. With that, I'd like to thank all of you for joining us, and meet you again next quarter. Thank you.